All right, so we have a PowerPoint slide. I also can pass these out. If you can't see well, raise your hand and I can pass you out the PowerPoint slides. Okay, we're going to record this so we can have it on our website after we're done today. You can share it with all your friends and your neighbors. Okay, so we're going to make sure we keep the noise low so we can hear her okay, and let's get started. Amy, thank you so much for being here.
Thank you, Patty, and I apologize if it's hard to hear. I tried to make a joke earlier that no one has ever accused me of talking quietly, so my husband mostly says that I don't need a microphone, but I'll do my best, and hope that folks in the back can hear. And as she said, we gave Patty the slide deck for her to share with all y'all, and it's just very much a pleasure to be with you, but sorry that it's under these circumstances. Obviously, you wouldn't be here in the middle of the afternoon on what I hope is a nice day up there in Butte County if you weren't in a really bad situation. So I want everybody to understand. I've been an insurance consumer advocate for over 35 years, and I've never seen anything like this. I think if you talk to people who are in the insurance business, they'll say the same thing. No one has ever seen a situation where private insurance companies were acting the way they are acting. So we're all doing our best to get through it. I wish I was here with a magic wand. But what I can promise you is I am here with the cutting edge, up to the minute information about the situation. Our organization is a charity like the Red Cross. We don't, we rely on grants and donations and volunteers to get our work done. We've been in business since 1991. We are here to help you solve your insurance problems. That's our main focus. We did a lot of work in your community after the Camp Fire and some of the other fires that have put a target on your backs for the insurance industry. Your community is one of the ones that's getting hardest hit. Partly because of all your beautiful trees, and because the fact that there have been wildfires up there that really has gotten their attention. So we run 3 programs: Roadmap to Preparedness, helping people be in a position to be resilient to disasters, have an inventory, have enough insurance, and then the Roadmap to Recovery is where we go in after a disaster and try to help you collect every dollar that's available to you from your insurance. And then Advocacy in Action, which is the work that we do in courts, with legislators, in the media, to influence outcomes in your favor as a consumer of insurance, right? So you're our target audience. You're the people that we exist to help. We offer, as best we can, trustworthy, plain language information that's in your best interest, right? We don't take money from insurance companies. We're here as your voice and your resource, right? But we also have a pipeline to listen to insurance companies. Why are they doing this? Why are they jacking up rates? Why are they dropping so many people? And trying to understand it so we can translate the jargon into plain English for you. All right. What are we doing? We're closely monitoring the marketplace. Which insurers are still writing, which aren't? What are your options? Working with stakeholders to restore affordable options, working hard to help y'all reduce risk and keep your properties adequately insured through this crisis. That's me on a ride along with the fire department back in 2016 in Moraga. People were starting to get non-renewed, and the fire department was trying to help, right? So I asked if I could go on one of their ride-alongs. So they would go to the house, show the homeowner, do this, 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 and this. They would give the homeowner a letter to use with their insurance company to say that this is an improved risk-reduced property. And then it was helping some people get their insurance companies to change their minds. Stopped helping probably around the time that insurance companies started using these scoring systems. And then COVID, and it's just been a big bunch of different things, explosion in technology that they can use, drone images, all those things. But anyway, that's me trying to help solve this problem now for many years. So what is our organization doing? We're helping you navigate. That's why I'm here, to give you some pointers, give you the lowdown, right? What's going on. We have a survey going, which we want you to all take. There's gonna slide that gives you the link. Just we're keeping our finger on the pulse of when you get dropped, who dropped you, who picked you up, did you have to go to the fair plan, how did your premium change? So you can help us keep our ear to the ground, right? We are advocating for you. Every week, it seems like I'm on some panel trying to talk to legislators or educate people about what's happening and how important it is that you guys that you get rewarded for the risk reduction that you do. We're working closely with the department. Are you guys hearing me okay at all?
Yes.
More or less, good. We're working with the firefighting experts. We're working with the scientists that say, oh, well, if you do this and that, it will make it less likely that the home will burn. And we can show that to the insurers and it should help them get more confidence. It's a work in progress, I would say. We have a help center online where you can go to find out what grants are available and all that in your area to help you limb your trees, and do the things that are on the list of these are the steps you should take to make your home less likely to burn. I have a working group that meets every month with people all over the state sharing good ideas for finding money to help households through grants, matching grants, pay for the steps, putting the screening your vents and all those things. And then we're talking to insurance companies all the time, trying to get them back here in the market. We talk to legislators about, tough love measures that we might do. It's a tough situation right now. There's just no sugarcoating it. And then we're advancing long-term solutions, like something that's being tried in one of the Tahoe areas, what's called a captive, which is like a community risk pool. So we're looking at every possible way to help you with these staggering bills that are hitting your households. So this is your page, Butte County, in our RAP Resource Center. You can go on there and get information about help that might be available to you in your area to reduce risk and get you qualified for discounts on your insurance. Unfortunately, the problems that we're having in California are impacting Colorado, a little bit Washington, a little bit Oregon. Our state and Colorado are getting it the worst because we had these series of wildfires in a row, boom, 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 that even though the last few years have been much better, and we're hoping that there's a lot more money now going into preventing fires. We had been prioritizing suppressing. Now we're trying to prevent, but we're trying to be smarter. There's fuel breaks being created around your areas and a lot of good progress being made in reducing your risk. But hey, again, you have a lot of trees. That's what makes your area beautiful. So we're trying to figure out how to get the right balance here. Y'all know this stuff. You don't need me to tell you. We have a crisis, right? How many of you, by a show of hands, have had to go into the FAIR plan? Okay, so a lot of people have had their premiums. If you're lucky, if you didn't get dropped, great, good, lucky. But your premiums probably have gone up a lot. Not lucky. But these days we're kind of we're looking for the least bad option, right? The best of the worst, right? Acknowledging that not great to have your premium go up, but it's better to have something than nothing, right? That's kind of a little bit of where we are right now, and working to make it better, right? So we are seeing, as you know, premiums doubling and tripling. We're seeing people who've been insured by one insurance company for many, many years getting dropped. And then folks are having this hard choice. Do I go with the FAIR plan? Or do I go with a company I've never heard of, which is in most cases a very lightly regulated company called a surplus lines, non-admitted, excess. It's the same lingo. It all means the same thing. It's a category of insurance companies that was supposed to be on the fringe, right? Surplus lines insurers would always insure like a boiler and machinery shop or some really obscure thing that a traditional insurer didn't know how to write, how to insure. Now they're moving into the residential and the business market in these states where the traditional brands that we all know that are called admitted, State Farm, Farmers, USAA, AAA, Foremost, Safeco, Liberty Mutual, on and on. Those are all the ones that are pulling back. And some of these new companies that you've never heard of are often going to be your choice, right? So we know all this. The FAIR Plan is overwhelmed, right? The good news, bad news. Good news is we have a FAIR Plan. So you don't have to go bare, right? It's not a great solution because the coverage is thin and it's expensive for what you get, but it's better than not having anything. So like Colorado doesn't even have a FAIR Plan. They just are building it now. And it's sort of a race to get their FAIR Plan built while their market deteriorates. But here we are in California, we have a FAIR Plan. And even though they're slow, they switched to a different platform in the fall, and it's been a bit of a cluster with how long it takes for them to bind a policy, but it's moving anyway, it's there. You do have an insurance commissioner who I think I would not want his job. I don't think anybody would want his job. But he's working as hard as he can. He's got this sustainable insurance strategy, which is aiming to increase your options. And so there's two things I want to say in the bottom line category. One, finding a good agent or broker is probably the most important thing you can do. And it doesn't have to be somebody local. It can be somebody in another area. It just has to be somebody that is hustling in this very challenging environment for their clients to find options, right? That's number one. Number two is avoiding underinsuring your home is still important. So if you weren't impacted by any of the wildfires in recent years, that's great. But if you were, or if you have friends and relatives and neighbors, you know that 2/3 of the people who get affected by wildfires are underinsured. They find out through no fault of their own, they thought they had the coverage, that they're short on their dwelling coverage. So even though we are in difficult conditions and home insurance has gotten much more expensive and hard to find, try to keep your dwelling insured for as close as you can to what it would cost to put it back, which is not an exact science, but I'm going to give you some tips on that. Here's the survey. If you can just take a few minutes, weigh in. We want to hear from as many people as possible about what's happened to you, your household. Okay, here's some affordability strategies. This one's basic. Find out what discounts are available and ask for those you qualify for. Bundle your home and auto. I used to tell people, some insurers are better at auto claims. Geico is good with the auto claims, AAA, but some companies are better with the home. I don't even say that anymore. Just bundling with one insurer is gonna bring your premiums down and help you hold on to your insurance. Raise your deductible. That's a very tried and true strategy. These days, there may be a percentage deductible that your insurer has slipped in. Do the math. So the idea with the deductible is, if you didn't know this, let's say your deductible is $5,000. That's what I carry. If I have a little leak, and it costs under 5,000 to fix it, I got to pay for that out of pocket, right? But to me, it's worth it because you don't want to file small claims so that those go on your record, and what's on your record affects your risk score, just like your credit score. It affects how much they're going to charge you. So you want to keep your risk score as good as you can. So you don't want to file small claims that you can pay out of pocket. And then you want to really kind of save it for the big stuff, right? This is a hard one for a lot of people to swallow because it does mean you have to have some cash on hand for these smaller losses. And it's also it's annoying, right? You're like, well, if I'm paying for this, why can't I use it? Which makes a lot of sense. It's just the where we are right now. It's just where we are. Okay. Reduce or eliminate buckets of coverage you can live without. Now, this is easy to say, not always easy to do, right? Because with some of the big name companies, they have automatic percentages, like, that your contents coverage for your stuff is going to be an automatic 75% of of what your dwelling is insured for. But for me, and look, I'm fortunate. I did not lose a home in a wildfire, but many of my staff members have, and some of my board members have had that personal experience. It's easy to say stuff is stuff, but stuff is important. Your contents and your personal property is important. But in many cases, you can get by with a little bit less contents coverage than what your insurer may have put in there. So these are just things to ask, right? If I eliminate, or if I eliminate other structures coverage, like that's your garages, outbuildings, walkways, and sheds. If you eliminated coverage for that, what would it bring the premium down? If it doesn't bring your premium down by very much, then don't bother. But high dollar limits on contents, ask that question. What if I reduce my contents coverage down to, I don't know, 200,000, 100,000, whatever your household is comfortable with? What's that going to do to the premium? Ask those questions. It's fine to ask them, because, the more insurers understand, and they get this, that some of them, how much pain they're inflicting on people. I think they get it. So I think that they're starting to be more flexible in letting you adjust your coverage so that you focus on just keeping the house insured, to keep it affordable. So mitigate, right? I'm sure you're hearing about this everywhere you turn. We understand that taking out your beloved trees that give you shade around your house, or moving your prized rose bush that you've been nurturing all those years, if you're still going to get dropped, it feels like, why would I do that, right? The reality is that insurers they have so much information, TMI, really too much information now about your homes, that they really are looking for the ones that would give the firefighters the best chance of saving, right? And that means defensible space. And it pains me to have to be that messenger. I know you're hearing it. That 5 feet clear around your home is going to be, it's down the road. It's going to really help you. It's going to help the firefighter save your home. It's going to help you keep insurance. Are you getting rewarded enough for that pain? No. Is my organization working our tails off to try to get you the discounts you deserve? Yes. Is the insurance commissioner's office also working hard? They really are. The insurers have come in and said, oh, we'll give people a 3%, 2% discount. And the commissioner's like, that's not enough. And I applaud him for that. It's taking longer than we'd like, but everything takes longer in insurance land, except for the premium notice. That seems to come fast, right? The discounts are not coming as fast as we want them to. But again, mitigating means, your home has a better chance of surviving regardless of what the impact is on your insurance. Don't file small claims. I mentioned that already. A lot of insurers are now saying, we want you to have a moisture sensor, so that if there's a leak, that we detect it before it becomes a bigger problem, right? This is lingo. I've already hit a few. Drop, non-renewed, same thing. Canceled, different. People say, oh, my insurance canceled. That can only happen at the end of the policy period. So, I mean, I'm sorry, canceled means they canceled you in the middle of the year of your policy. Very limited circumstances that they can do that. Most of you, if you're here, and you may have gotten non-renewed, right? Dropped, non-renewed, same thing, right? You heard me talk about admitted or non-admitted. Those are two kinds of insurance companies. My computer just does that. Fully or lightly regulated. I know, I wish, right? I wish we were having a party. A lot of you are having to go to these non-admitted companies because that's your only choice. And it really depends on which one you go to if you go that route. They're not protected if they go belly up. Some of you may have heard about Merced casualty after the campfire going under. The bad news was that they went under. The good news was that they were covered by the California Insurance Guarantee Act, which meant that folks could get up to 500,000, which is certainly better than nothing. So the problem with these surplus lines companies is they're not in that program. So it's extra important if you go to one of them that they have a good rating and a good financial strength. And a lot of them do. But again, it comes back to having that really good agent that isn't just trying to, push you into any old thing, but that's actually finding you a product that's going to be there for you. Okay. Risk score, that has become a very big deal. We're going to talk about that a little later. What are the rules? They have to give you 75 days notice before if they're not going to offer you a new policy. If they don't give you 75 days notice, they have to extend your policy and give you that 75 days. Okay. We don't really have any moratoriums in place right now because thank goodness we haven't had any recent mega fires. Hopefully we won't for quite a while. So really there's no protections in place other than the 75 days, right? They have to tell you your risk score. And if you think that your risk score is unfair, which is a little bit murky of like, well, how would I know, right? You can ask them, is it based on my address? Is it based, they've used different scoring programs. I've heard some people be able to improve their risk score by correcting misinformation about like how close the house is to a fire hydrant or how close the house is to a fire station. So it's nothing ventured, nothing gained. You might as well try and improve your risk score if you can, right? So yeah, you'll hear a lot in the papers now about insurers are saying it's hard to do business in California because it takes so long to get their rates approved. The truth is, this is not just one thing that's driving what's happening, right? It's the COVID-19 business interruption, supply chain made labor and materials more expensive and led to inflation. And we have all the technology, and insurers are just not making the same money that they had been making. That when they complain about the rates, that's a political agenda for them that has some truth. It does take longer for an insurance company to get their rates approved in California. There's no question. In Nevada, they just file them 3 weeks later, boom, right? We do try to protect you here in California. So the department does like to try to take its time before they rubber stamp. We don't rubber stamp rate increases here in California. So if you think that the Department of Insurance is not on your side, you got to think again. They are on your side. They just don't have a magic wand either, right? So why did you get non-renewed? Okay, sometimes you can get it reversed, but don't waste too much time. Really get shopping as soon as you get that non-renewal notice, right? Start shopping right away, get help from an inexperienced agent, ask good questions, take good notes. If the FAIR plan's your only option, then keep shopping even after you get that policy bound, right? And if you're doing this on your own, which is very hard, I say let the Department of Insurance know, fill out their complaint form, tell them what your situation is, go on record. But, the idea of going down their list of 200 names and calling every one of them as an individual person breaks my heart to think about you doing that. I'd rather see you find that good agent and let them cut through all the BS and help you identify your options, all right? But you can go to the department website and see every single insurance company in the state of California. These are the 4. Now, what happens if you just do nothing and your insurance policy lapses, right? It ends and you just don't do anything. Well, if you don't have a mortgage, there you are, naked, bare, whatever. You don't have any financial security net under you. It's scary and obviously not what we want for you, right? I mean, I like to remind people who think, oh, well, the government will bail me out. The biggest grant you can get from FEMA as an individual is $42,000, and then there's some housing assistance on top of that, but it's income determined as well. So there's no government equivalent of the kind of dollars that you get from an insurance company if you've had a wildfire. I'm sorry to say, there just isn't. Okay. So what happens? So if you're bare, okay, it's a decision more households are making. I cannot blame somebody for going that route if you literally cannot afford the options that are being offered to you. But I just really encourage you to keep trying. The other option is a forced or lender-placed policy. So if you have a mortgage and your policy ends and you don't put something in place, your mortgage company is going to put one in for you. And then they're just going to tack the very expensive premium onto your debt. So it's going to get added to your mortgage debt. And you're really paying for a craptastic product. So it's better to do, for most people, it's better to do fair plan or a surplus lines any day of the week than to get a forced place policy put on, because again, they're going to be expensive. But I don't say never anymore. So as far as I'm concerned, if your mortgage company sends you a letter and says, we're going to force place, find out what the cost of it is going to be. It's only going to cover the house though. It's not going to cover your stuff, right? It's just going to cover the amount of the mortgage. So that's really something to avoid. Okay. So, like I said, these are the brand names that we've all been insured with for all these years. Those are the ones you want to be with if you can. They're protected in case they go belly up. Their rates and forms are regulated, right? These surplus lines companies can sell pretty much, they can be creative, use creative writing, but some of their products are fine. I'm not anti across the board surplus lines, but I just rather see all of you with these, but so would you, right? So there's the DOI's Home Finder. You can definitely go in there. I just caution you, to not get frustrated, dialing for, down a long list. Okay, so these surplus, what are some of the names? Well, Lloyd's of London is the most famous one that you'd know, and they generally all of their subsidiaries are financially strong. These are some of the other ones that some of our agent volunteers are placing clients with: KW Specialty, Delos, SES, Bamboo, Shure, Burns and Wilcox. They're like a intermediary, but they can maybe able to place you, and Northlight, which is an Allstate subsidiary. Those are just some of the names that might come across that might be an option for you. This is the Lasley list is where you'll find all of the surplus lines companies. And then AM Best is where if you're about to insure your home through one of these companies you've never heard of, you can go on the AM Best website and see what their rating is. A minus, B is fine. As I said earlier, no matter which insurer you end up with, you want to keep focus on your dwelling. That's coverage A in most policies. And you want, let's say, you want to have, if you have a 2,000 square foot home, numbers are all over the map about per square foot, but let's say you take a little bit of a high number, 400, you wouldn't want to have $800,000 in coverage. But that's just a rough estimate. So there are different kinds of insurance agents. It used to be, when this crisis was first starting, I would say to people, you're going to be much better off with an independent agent, because they're a broker, they can put you with one of 6 or so companies that they have a contract with. A captive agent, your State Farm, your Farmer, they can only, in the past, they could only sell you a Farmer's product or a State Farm product. To keep their agents from going completely under, Farmers now lets their agents sell these surplus lines policies. They can also put you with the Fair Plan. A State Farm agent can also put you with the Fair Plan, but they really don't have a lot of other options for you. So these days, I just say the most important thing, word of mouth. Somebody you know has an agent that helped them and got them placed, you call that person, right? That is one of the trickiest things, to find that reliable person. Now, you can look at our shopping help webinars. I have, every time I do one, the last one I did, I think, was in October, because we're doing so many things like this one with other friends. But the ones that my organization has done on our own, I always have a panel of like 4 agents from different parts of the state. And and you can see who they are, and you're welcome to reach out to any of them for help. Okay. It used to be easier to pay on installments, but in addition to dropping a lot of their customers, a lot of insurers have stopped offering installment payments. They want you to pay up front. Some insurance broker agencies are helping their clients with financing for premiums. The Fair Plan finally is offering installment payments. We pushed and pushed for that to happen. So I hope that might be helpful to some of you. I talked about your risk score. At least you should find out what score the insurance company, if that you currently have, or the one that non-renewed you, had assigned to you. Some of them go 1 through 30, some of them go 1 through 100. They're different scoring systems. But again, the more the better off you'll be. So this is the Department of Insurance's toll-free number if you want help figuring out what your home score is. This is what you can get through the Fair Plan. You get the basic policy. That's what it covers: fire, lightning, internal explosion, smoke. If you buy an add-on, you can get water damage, theft, and protection against lawsuits. A lot of people don't know, a lot of agents don't know, more now than they used to. Agents used to never want to put people with the Fair Plan, but now it's the only choice for a lot of folks. So you can get these options. A lot of people don't know that. The Fair Plan offers some enhanced coverages, okay? Replacement costs on your dwelling and contents, you want that for sure. Optional increase for fair rental value, that's how the Fair Plan, that's their equivalent of your temporary rent, loss of use, etc. Okay, so those are some of the options. This is a little bit of good news. You can now qualify for up to 15% total discount on your Fair Plan premium if you can do the following. And this is the rub. If you can have a Class A roof, 6 inches at the bottom of your exterior wall between the ground and shingles. So 6 inches of non-combustible material. Could be brick, can be stucco, just can't be wood. Vents have to be screened. Windows have to be double paned. Eaves have to be enclosed. Okay, that will get you a 10% discount on your Fair Plan policy. To get the full discount, the 5% extra, you got to have that 5 feet. And then this other part that I think is probably hard for people in your area, you're not supposed to have any combustible sheds or outbuildings within 30 feet from your dwelling. That's a tough one. And then you have to clear vegetation and debris from under your decks. Okay. Oh boy. So how much is enough insurance? One option for getting a replacement cost estimate on your home, and this may, I can't promise, but it may help you get your Fair Plan application process faster, is this company, bwbuilder.com. They will give you for $150 an estimate of basically how much your home should be insured for, what the replacement value of your home is. Remember, I talked about that $200 a square or $400 a square foot multiplied by 2,000. They can do math for you in that way. You know, I'm not fronting for them. They are trying to help people get through the situation. They love our organization. They have been a big help to a lot of the people in the North Bay who lost their homes in 2017, 2018, giving them documentation to strengthen their negotiations with their insurance companies. So if you use them, first of all, we want to hear back from you. Did it help? They will give us $25 out of the 150. So I'm not pushing it, but I'm telling you it's an option to help, because apparently people are trying all kinds of experiments to get the FAIR plan to complete their, to bind, to process their application and get them a policy. People are calling on Saturday morning and finding some luck. It's tough. Like I said, listen, I love trees as much as anyone, so this pains me. But this is what we're looking at here. These are the things that have to be done, creating defensible space and hardening your home, right? Why screening events matter? Homes burn due to windblown embers, right? In fact, a lot. It's amazing. 60 to 90% of homes that are lost are due to embers, right? Not flames, but embers coming flying, you know, in the wind. Installing mesh over all openings keeps embers from coming in. It's one of the most cost-effective things you can do. Last year, you might have read that the Institute for Home and Business Safety, IBHS, came and did a big event in Paradise, and 2 homes got their certification as a wildfire prepared home, which is great. But I understand that it's been very hard for other folks to get that designation. This is the process. They've got folks that'll come out and inspect and tell you what you need to do. The hard part is doing what they want you to do, right? And then the other hard part is, then what am I going to get rewarded, right? So you've all been incredibly patient listening to me talking about insurance for quite a while here. No one's favorite topic. But I want to leave you with a couple of thoughts. We are going through, like I said, an unprecedented situation. There's a lot of powerful people working to fix it. Real estate agents, mortgage lenders, public officials, the Department of Insurance. So we're going to get through this. It's going to take a while. So partly what I'm here to tell you is just try to hold on through this. Try to have some insurance on your dwelling until we can really fix this. But there's a lot of people working, including my organization, to fix it. Getting to that quality agent or broker is probably one of the most useful things I can recommend. Avoiding underinsurance, raising your deductible is good. Don't forget to take your phone, walk around inside and out your house with the video narrating. Here's my bedroom set that we got at Macy's, or here's my couch that I inherited from my aunt. Open up the drawers. Here's my silverware. Here's my jewelry. Here's my collections of whatever you have. Here's my gun cabinet. Here's my art. Have all of that documented so that you've got that evidence, that inventory, and then email it to somebody, or have it saved in a file that you'll be able to use. Or if you do it on paper, which is fine, just don't store it at your house, okay? Participate, if you can, in your community's FireWise or fire safe activities. what insurance companies keep saying that they want to see, great when one home does it, but not enough. They want to see critical mass in the community. They want to see a whole bunch of houses that have done the home hardening and the defensible space, right? They need, we need to help them restore confidence in your community while we examine other options. I don't like them putting everybody in the situation any more than you do. To me, when I hear, insurance commissioners, not just here, but in other states, say that they're begging insurance companies to come back, I mean, that just kills me, right? Why should these companies have that kind of power? But we don't have alternatives. We're building them as fast as we can. We're looking at community risk pools. We're looking at publicly provided reinsurance, which is part of the problem here. But in the meantime, try to hang in there as best you can, and stay informed. And my organization is going to continue to bring you the names of the companies we hear about that might be an option for you, and our recommendations as best we can. So reminding you, insurance money, not charitable or government aid, is the #1 source of money that helps people rebuild and recover after disasters. SBA loans are low interest and they're great. They're up to 500,000, but they have to be repaid. And then the aid you'll get from charities, as you probably know, covers basic needs, not the cost of rebuilding a home. Couple things that are happening in California. The insurers have been saying, we need this, we need that in order to feel safe doing business here. So the commissioners trying to give them their two main things. They're saying they need to get their rates through faster, rate increases approved faster. Feels like they're getting approved, but they say they need more predictability. Okay. They want to be able to use what are called CAT models. They want to be able to use these predictive models that say, we're not just using the past, because with climate change, it's different now, right? Things are different. We're getting crazy weather in ways we didn't used to get. So these CAT models say that they can project into the future better than using the past. That's what they want. We're the commissioners trying to give it to them. But they're still kind of going, we'll see, right? So the commissioner's predicting that things are going to ease up next year. I'm predicting the same thing. But I know that's sort of small comfort right now. So I would say, just to reassure you, it's not like your elected officials aren't working very hard. They are. It's just a very, very complicated, multi-pronged problem that has brought us to where we are today. And I am happy, if it's possible, Patty, we've got, a little bit more time. I would be happy to take some questions if you're comfortable with that. It's hard to just sort of talk at folks. I don't know if you want to do that. It's up to you.
I would love to do that, and so I'll repeat the question so that you can hear it, okay? Okay, questions?
I have a question.
Okay,
Have they ever considered doing with fire insurance like they do earthquake insurance? Charge a 10% premium if you live in a fire, if the fire is caused by a wildfire.
could you hear that?
So, yes, I did. So, so you may remember that after the 1994 Northridge earthquake, the home insurers threw a giant hissy, and they said, we're not going to insure earthquake insurance anymore. It's an uninsurable risk. It's too big. So the state created the California Earthquake Authority, and now we have this option, but only 8% or so of Californians have that coverage because it's a high risk pool. It's relatively expensive, and because it's only people who live close to a fault line are buying it. So you don't have that balancing effect right now. You guys are rural, right? So you have your risks, you have wildfire risks. You don't have the burglary risks and the the same kind of urban problems, right? That we have, say, in San Francisco. But that balances each other out, right? Because that means that they're not, this is a long-winded way of saying the problem with creating a wildfire only pool is that, oh, there it is again, having a party. The problem with having a wildfire only pool is the coverage is going to be very expensive. And that means that, you know, only people like you are going to be buying it, and you're not going to get that sort of balance that the urban people bring you. And then, you know, and so it's tricky. There's a lot of ideas on the table, like, oh, could we turn the FAIR plan into a like a cat risk, you know, catastrophic risk, you know, super high dollar, you know, worst case scenario type of an entity. I think right now, I mean, our FAIR plan is a good recipe because it doesn't burden the taxpayers at large. The claims paying capacity comes from the insurance companies. So our FAIR plan, as much as everyone likes to bash it, it's so much better than any other state because it's really the insurance companies, it's their money. Oh, it's your money, the premiums you pay them, and then they invest and grow, but it's not taxpayer supported. So the FAIR plan, it's overburdened. It needs to be better. You know, I mean, I could go on with all the things that we want the FAIR plan to do better, but I don't know that creating a wildfire only pool is going to solve our problems. I feel like that just could make it even more expensive, is my concern. You know, the whole thing about insurance, that what makes it work, and this is what we know from the Affordable Care Act, which, you know, like it or don't like it, you've got old, young, sick, healthy in one pool balancing each other out. That's what makes it work, right? When you have only, you know, people who are not well, of course it's going to be expensive because there's no healthier people who are paying premiums and not using the coverage because they don't need it to counterbalance, right? I hope that kind of explains it. But that idea is not off the table at all. Are there other questions?
Is there a plan to fix the discrepancy between IBHS's wildfire prepared home and the California FAIR plan with that enclosed eaves situation? So like, that is my house in your presentation, that's wildfire prepared, but FAIR plan won't give me the home hardening discount because my eaves are treated but not enclosed.
Oh, for crying out loud. Well, I would say, have you looked into getting funding to enclose the eaves, or is there a reason that you can't?
I don't think I should have to. I mean, I have wildfire prepared home designation.
Right. The problem is that is a private, I mean, IBHS is not a government entity. They're supported by the insurance industry. And I mean, the enclosed eaves is the safer from yeah, that's actually, they don't enclose. Did you get the plus designation?
No, just the original one.
Just the original one. Oh, because you don't have the enclosed eaves. Yeah.
Yeah, the Plus program requires enclosed eaves.
Right. Yeah.
So is there no movement to like make that count? It's just not gonna ever count.
I don't know. I can't say not ever. I think we're working to get any discount at all, right? That's kind of where we've been. And then the FAIR plan discount, I want to see somebody get it. I have not heard of a person yet who's actually gotten it. And I worry that that's partly because they're so short-staffed and so overwhelmed with the volume of applications, and they're scrambling that I don't know if they have the resources. That's not a good excuse. I assume you probably have gone to your elected official, your state assembly person and senator. That would be the pressure point.
Okay.
Because the department and the FAIR plan are not friends. The Department of Insurance ordered the FAIR plan to sell a normal home insurance policy. And then the fair plan said, no, make us, and went to court. And that lawsuit is going on and on and on. That's separate from this. They're not friendly, those two entities. So the fair plan
We have
is,
another question.
sorry, go ahead.
Yes.
One of my concerns is being a senior citizen and a recent widow, are we gonna have difficulty selling our homes if we need to sell our homes?
Well, okay, that is definitely a concern. That the insurance price tag could turn off a buyer and could make you have to take, lower your asking price. If you're not looking to sell right now, I would just say just don't worry yet about it, but definitely there's been lots of buzz about that, people saying, the deal's not going through, or because the buyers got the jitters about being able to get insurance. But again, because the fair plan's there, it's not so much an availability as an affordability problem, right? You
Any
can,
questions? Yes.
Is there truth that there's a grant being put together to assist people in getting their houses up to that standard that they're trying to get?
Okay, I can answer this one. We do at Town of Paradise, we have a grant for the Wildfire Home Prepared Certified Program. And if you do apply, it's $125. It's good for a couple of years. If you get certified, the Town of Paradise will reimburse you the $125.
But like her, you're not gonna get certified, because they're gonna let you go all the way to the top but not certified, like they did to her.
That is a different program that was, right?
It's the same program,
Oh,
but you have to have your eaves enclosed.
Yeah,
So you
So-
have to,
you have to box them in.
you get reimbursed once you get certified.
but
yeah.
just the certification's not gonna do it for you. You have to do all the things plus.
Oh, right, I have to realize you have to do all the things. But will they still turn it down, because you're saying that no one has ever reached that level?
No, we have people that have been certified in
Okay.
Paradise, the home
Not
wildfire.
25+.
Haven't gotten the discount from fair plan.
That's what I'm
Oh,
talking
okay.
about.
Okay, that's Amy.
I'm sorry, was there a question there?
Yeah, so if they're saying will California Fair Plan ever give the discount, right?
All right.
For the
Uh-huh.
wildfire
For
prepared,
the wildfire prepared home,
the basic.
for basic
Not the
wildfire
plus.
prepared home.
I think that I have to say, actually, I could see that happening. I think when the two standards came out, like I had a working group, we put the first set of standards out. We're like, well, we understand we don't have the weight of an agency. Then the IBHS put theirs out. We didn't have enclosed eaves on ours. Neither did IBHS in the original one. Then the Safer from Wildfires, which is CAL FIRE, and the DOI, they had the enclosed eaves. And we were worried about that because we thought, that's not something people can do on their own. But the experts keep saying, nope, you need it, you need it, you need it. But I could see
Oh, you're
lobbying
breaking up.
I could see.
You're
the fair
breaking up.
plan- Sorry?
Can you hear me?
Yes.
Okay, well, we're waiting to see if she'll come back. I do want to point out that we have materials about the wildfire preparedness program here at the Building Resiliency Center. However, it's a separate entity from us, and so you have to go online to apply. We can't take your applications here. And it's wildfirepreparedhome.org. And we have the difference between the regular and the plus program to show you a little bit about that. And with our WUI requirements that we have with all of our new construction, you should automatically be able to apply for the regular wildfire prepared homes.
Is this to be certified for the certification?
For the certification, which is separate from California Fair Plan. Okay, but this is to make you more attractive to insurance companies.
Try to get the plus.
Yes.
I have one more thing.
Okay,
I just had a fairly good experience getting on the California Fair Plan. They approved me in less than 2 weeks. I'm wondering if anybody here Is there any other agency issuing policies? Because every place I checked.
Did you
nobody's
hear
writing
that?
policies.
Is there any other agency, what?
Writing new policies.
Any of the main.
Well,
insurers?
those names that I mentioned, well, first of all, some of the brand name insurers are still writing, but just on a very limited quota, right? So like, this agency is only allowed to write 5 new policies a month, or they're just, so a little bit, it's like, and I don't want to say the luck of the draw, but like, that's why you could try a couple different agents, because each of their agencies might have a different allotment of the number of policies they're allowed to sell, right? But those names, I can bring that slide up again. Hang on a second.
Well, then they were not issuing to McGalligan zip code.
Yeah, well, you see, this is the problem. The problem is that the zip code, your zip code can be an automatic, like, no, right? Like I just talked to an agent yesterday in Sonoma who gave me like a couple of zip codes that are completely like there's nothing except the fair plan. But yeah, let me just show you one more time that one slide. These are some of those names of that an agent in Oakland gave me that she is getting some luck with. And this was just last week. Bamboo, Shore, and Northlight. I would try Northlight. I mean, it's crazy to even be at this level. I usually don't like to name names, but we're just trying everything we can to help. So those are some names to consider. Probably Liberty Mutual, no. I don't, AAA, you can try.
Insuring McGalligan, I call
Yeah. So, again, it's so unfair. I mean, I should start by saying it's so unfair, that just because there was a wildfire there, that now you're getting it even worse when you already have a trauma. But that's just how, insurance companies see us as risks, right? They don't see us as people, they see us as a risk, right? So they look at our characteristics and say, this person, and that's the number the risk scoring, is like, oh, this is a 5, this is a that. But there are a lot of there is innovation coming, I think. It's just slow in coming, and that's why I kind of keep going back to, like, if you're in the FAIR plan, you got some kind of a safety net. Try to do all those things. Unfortunately, including enclosing your eaves, because it's in there as, I mean, this is hard. I talk to firefighters and I talk to IBHS, and we say, can't you give some people some great slack here? Can they do like 3 out of the 6 things? And they just always come back and say that as long as the home has those one or more of those vulnerabilities, it's still vulnerable. It's hard, right? Because you're like, well, you were insuring us all these years, and suddenly what? Anyway, so do everything you can. Your town, your city is behind you. They are Paradise and Butte County have been leading, the fight here to get you protected and to get money your way for risk reduction. So, again, it's not that your elected officials aren't trying. They are, I think they're working pretty hard. And on that note, Patty, we can wrap up.
Okay, thank you so much. So I want to, I have copies of the slides. I'm going to make some more copies if you would like copies. Also, this has been recorded, and we're going to put this on our Town of Paradise website, so you can share it with your friends and neighbors. The links that she's talking about are in the slides, so it will be there available for you. if Amy has any other links that you would like to share with us, webinars, things like that, we could also do that so that you can be more educated, because we are all trying to navigate this. One more question.
Is there any contact information if we have questions following this that we could reach out and get answers faster?
Oh, is there contact information if there's questions about this?
Sure,
Wherever.
you can email info@uphelp.org. Info at uphelp.
It is UP Help
Yeah.
for United Policyholders.
One clarification.
Yes.
Does the certification has to be done before the California Fair Plan? Is that correct?
No,
No,
they're separate.
they're separate, that's what.
They're asking for the same types of things. Is that right? California Fair Plan and the Wildfire Home Program.
They're almost identical. The only difference is the base level of an IBHS wildfire prepared home doesn't require you to box your eaves, and the Safer from Wildfires doesn't. And apparently this Fair Plan discount, you have to do that.
See any discount if they have the wildfire prepared home certification?
Well, with a regular insurance company, not the Fair Plan, there should be.
Yeah.
And you know, we tell people definitely provide your insurer with that information, you know, that with the certification. I would also get in touch with IBHS if you've gotten their certification and ask them to help you, because they're funded by insurance companies. So they dialogue with insurance companies, right? So, I mean, I don't think they're offering that service, but you can ask for them to help you, to help make your case.
Any other, one more question? We have time for one more.
Basically, I'm kind of seeing this, that it's a growing crisis. And I'm just wondering if our United States government may be thinking about this at all. Because look at Hawaii, they just had a big fire, right? They're going to be involved in insurance problems, no doubt.
Right.
And other big fires that are going to come up, you know, there's
Or
always going to
any
be fires.
disaster.
So I'm just wondering if the US government's going to maybe help.
Yeah, well, actually, there's a lot of conversations going on. Congressman Adam Schiff, I don't think he represents goes far north as y'all. You might have LaMalfa, I think, right?
Yeah.
Anyway,
Yes.
yeah. Well, LaMalfa and Congressman Thompson just put a bill in to do $10,000 grants from the federal government for mitigation, but Schiff put a bill in that my organization lent our support to, because it's sets up a federal reinsurance program. Reinsurance is one of the many things that's driving this crisis. So insurance companies, it's buy reinsurance. They can say, well, we can handle this much risk, but above here, they buy insurance, right? That's called reinsurance. Well, the reinsurance market has gotten, the last few years, has been what's called hard, and that just means expensive. And then that's part of what's happening here, is that companies like Farmers and all these other ones that buy reinsurance have had to spend more on reinsurance. And they also, the reinsurers are the sort of the puppet masters, and the reinsurers are like, wait a minute, we don't want to see you insuring any home that has a risk score above a certain amount, right? So what this Schiff bill would do is say, okay, private reinsurance market, fine, you're there, you're powerful, you're world dominators, but this is so important to American homeowners, American citizens, that we're going to have to provide some reinsurance alternative or supplement. That the federal government did this with terrorism risks, right? We had 9/11, all the insurers, oh no, we're not going to cover that. It's too much. We can't handle it. Sort of sounds familiar, right? Earthquake insurance, same thing. So the federal government created something called TRIA, the Terrorism Risk Insurance Association. So we're looking at doing something similar to that for catastrophic risk. But, you know, this country needs to pull together, because, you know, we have all this like, oh, well, you know, people on the East Coast or people in Florida like to say, oh, well, California, it's not, we don't have their problems. Well, we all are vulnerable, right? So we just have to be smart with the math, right? The federal government has some financial strength that we need in this space. But there's a lot of many rivers to cross to get there, because what happens is when you talk about creating a federal program, some of the states' rights people are like, oh no, that's a state thing. And so we just have to try to put aside those kind of partisan views and think we really all are vulnerable. I mean, climate change for sure. I mean, if you saw the rain, pouring down into the subway stations in Manhattan, and you see, hail in San Francisco, things are, it's just we're in a new era, and we have to think that way, right? So I really thank all of you for your time, and
I have one more really tough question. Do you see our rates a year from now tripling again?
no.
Yes.
No, I really
Let's end
don't.
on that note.
No, and the more you mitigate, the more that we can bring them down.
Good, fantastic. Thank you so much, Amy. We
Sure.
appreciate you being here and helping us once again up here on the ridge, and we're probably going to reach out to you again.
My pleasure.
But thank you so much, and if
Thank
you have
you.
new information, please share it with me, and
Okay,
I'll let everybody know, okay?
will do. Thank
Okay,
you.
thank you, Amy. Thank you so much.
Good luck. All right.
Excuse me, just.